Tax Resolution Ninja Show, where we feature the top experts on all things tax to help you understand, navigate, and resolve all your tax-related issues. Now, let's get started with the show.
Hi, this is Allan Rolnick. I'm the host of Tax Resolution Ninja Show, where I feature top leaders who help people with major life events like divorce, health issues, losing a job, and many more. I have Dr. Jeremy Weiss here, who has done thousands of interviews and with successful leaders and CEOs. And we have flipped the script, and he will be interviewing me.
You know, Allan, I know thanks for having me. I know you've told me, you've been a part of these groups, these business groups, and they started calling you the Tax Resolution Ninja. So, not that you're like light on your feet, but it's for your tax skills. But we're going to talk, the sexiest topic of all time today, deductions. And for a business owner, that actually is sexy, but also so people don't get into trouble. But if people have questions, they can go to TristateTaxResolution.com. You've been doing this for over 39 years. And so you specialize when the IRS comes knocking, people start getting, threatening letters. People call you. And a lot of time it may be due to divorce, health crisis, debt from medical care, losing a job, whatever it is. So check it out. Check them out. Email them if you have questions. Everyone knows someone who's messed this up, I'm sure, Allan. Deductions. There was a guy, John, and you said what was happening with his deductions.
Okay, so he does his, I think it was his 2007, this goes back a while. He does his 2007 tax return. And then he does
by himself.
By
himself.
Takes terrible tax and does it by himself. 2008, he does the same thing. Well, the letter comes that he's being audited. And I don't remember how he got a hold of, how he contacted me. I think his wife met my wife something like that. I go down to the, I take him on as a client. I have a conversation with the auditor. The auditor wants me to come in with the records. And we
Is the auditor from the government or what?
No, the government is from the Internal Revenue Service.
Got it.
Okay. We go through the paperwork, and it turns out that he I remember now. He had an apartment. He had a rental apartment, a condo that he was renting out. And so there was a mortgage on that. And then there was a mortgage on his home. And there were real estate taxes on both. And what he does, he takes the interest on the mortgage from the rental apartment, applies it to the rental income like you're supposed to, takes the real estate taxes and applies it to the real estate taxes from the rental property, and applies it to the rental income, and then goes ahead and takes the same two deductions and puts it on Schedule A, which is the itemized deductions. So he doubled up on for 2 years. For 2 years, he doubles up on the interest on the interest and real estate taxes on the rental property, and puts it on his Schedule A, which is for personal purpose. If you don't know it, for personal purposes, it's not for business purposes. It's not for rental income. And so the government comes in and shows me the 1099s, and for some reason he didn't have copies of any of this stuff. They show me the 1099s and say, look, you only have 1099s for such and such amount, and he's got this on his tax return. Well, this is sort of like getting caught with your pants down, and there's nothing you can do.
Yeah.
All right.
What were they hitting him with? What kind of bill or?
Well, they hit him with. They increased it. Obviously, they increased his taxable income by the interest and real estate tax dollars, and there may have been one or two other things that he put down that he probably shouldn't have. And so the bill came due, but what I managed to be able to do in this case, even though I couldn't save him the liability, was I managed to get them to knock off the penalties. So there were no penalties for either year.
What did the penalties look like for something like that?
I don't know. Maybe it may have been
So it could be like in the thousands of dollars type.
It could be depending on.
But they won't let him out of that. Like he has. Does he put him on a payment plan of some sort? Because that's.
Well, they could have, but they had the money to, this particular person actually had the money to pay it.
Got it.
And so we paid it, and that was the end of it, minus the penalties.
Yeah. I'm sure people get hit with a lot of things as far as penalties and interest and all that goes. Why? It seems like the person was sophisticated enough to have investment properties. Why do people decide to do it themselves?
One of these guys that thinks he knows it all.
Yeah.
And in reality, he doesn't know as much as he thinks he does.
Yeah.
So
you mean there's people that go to lots of school for this, Allan? Like actually to do taxes? No.
Yes. Yeah.
Why do people decide that?
The value of doing a tax return.
That's why people don't do taxes.
It's not just people think just putting numbers in the box.
Yeah.
And sometimes that's true. I mean, if you just have a W-2 and you just have a mortgage on your house, it's no big deal. But sometimes it gets
you could still make a mistake.
Right, you can still make a mistake. But sometimes it gets a little complicated, and you shouldn't be doing excuse me, you shouldn't be doing your own.
So on some deductions, let's talk deductions for a second. Okay. What are some deductions maybe people should be taking that aren't? The reverse is ones they think they should have that they don't.
Okay, since they changed the code back in 2000.
And I'll put a disclaimer here: you got to check with your accountant and other thing, and laws are always updating. But as of now, recording
because they changed the code, stuff like your job expense. If you had job expenses that your job didn't cover, are no longer. They were deductible before 2000. I can't remember already. 2018, and not deductible now. Is that that you may that were allowed back in 2000 before 2018 that you can't take anymore. So some people still think that you can do it.
Like what's one that's dated back that people?
Well, they're if you have investment expenses, you invested in you used advisory service. That was you can put that on your Schedule A before. You can't do that now. There's stuff like that.
So people trying to do it themselves maybe have outdated information,
maybe unaware, or they're being wise asses and think they can get away with it still. So I mean, you really they simplified it, but they made it more complicated. So when
there's too much to keep track of. I don't think I'd ever want to do what you do because there's too much.
The thing is, they increased the standard deduction, so that sort of wipes out the Schedule A's for a lot of people. So you don't have as many. What they also did, and they hurt some people by doing this, is they took away the personal exemptions. So the standard deduction may not cover family of 4, whereas before the standard deduction was lower, but you got your exemptions. So it comes out to your standard deduction comes out to a little less money than you would have gotten the other way.
That and more. Check out other episodes. Check out guests. Go to tristatetaxresolution.com. Allan, appreciate it.
Thank you. I appreciate you interviewing me, and it was good talking to you.
Thanks for listening to the Tax Resolution Ninja Show. Be sure to click subscribe to get updates on our latest episodes.